Okay, thank you and welcome back to the last session of our financial structures and practices on the art market. We're finishing up with a session on valuation. We're going to try to tease out how art, this illiquid, this unregulated asset, is valued with three different presentations. So I'm first welcoming Alessia Crotta and Philip Vermeulen from Erasmus University Rotterdam, and they're going to be talking to us about, does nudity sell? An econometric analysis of the value of female nudity in Modigliani portrait. The floor is yours.
Well, good afternoon, everyone. And first of all, thank you to the organizers for inviting us to this wonderful conference. I also want to extend a thank you to those diehards still out there, on this sunny afternoon. They're sacrificing a little bit of summer, but hopefully this will be worth their while. The paper we will be presenting is born out of a master thesis written by then master student Alessia Crotta, and of which I have the privilege of supervising. And I thought it was such a neat case study exploring sort of this fascinating yet problematic tension between artistic value, in this case the presence of nudity in the oeuvre of an artist, versus sort of the economic value, of course the price. We are now in the process of trying to convert this little research into a publishable paper. So it's very much work in progress. And we are grateful that we can present right now. So hopefully we will get some feedback, some critical comments, so that we can really wrap up this paper, in the coming weeks and months. But I don't want to steal Alessia's thunder, so I'm quickly going to give the floor to her, and I will be happy to answer questions later on. Alessia, go for it.
Thank you, Philip, so much for the introduction, and thank you, Benedict, also for your introduction, and thank you for the organizers for this opportunity to present our research. As it was already anticipated by Benedict, our research working paper is entitled "Does Nudity Sell?" And it consists in an econometric analysis on the value of female nudity in the case of Modigliani's portraits when they are placed at auction. The greater issue that our research began from relates to the very complicated, complex, and very much debated relationship between two disciplines that, as cultural economists, we deal with on an everyday basis. These two disciplines are art history and economics. To be more precise, we aimed at providing a connection between art historical value, art historical evaluations, and economic evaluations through the concept of female nudity and its definition and conceptualization according to artist Amedeo Modigliani. To be more generic, our aim, or the aim of our research here, was to fill the existing gap between art historical assessments and economic assessments. From this more general issue and from this general aim of the research, we drafted our research question, which wonders to what extent the presence of female nudity affects the price of Modigliani's portraits at auction. There is one note to be made regarding the research question, in particular regarding to the term price. In our analysis, we connect the economic evaluation directly to price. However, we look into the price not only as the willingness to pay of the collectors, and in that we include the hammer price, but also we aim at looking at multiple stakeholders and actors in the art market. Reason for which, beyond having a data set focusing on the hammer price and an analysis on the hammer price, we also have a separate data set focusing on the average estimated price, in that we think that the estimation of art experts working for art auctions could be also an interesting perspective to look into in connection to the relevance of the female nude and how it affects these two perspectives and these two prices. There are other clarifications to be made in regards to the research question. From a purely theoretical perspective, the most important clarification to be made regards the choice of subject. Our decision to focus on the subject of female nudity was quite straightforward in that in investigating existing research and literature in the field of art history, it was immediate for us to see the importance and relevance that this subject has within this field. So that way, starting from the assumption that we knew this was a very interesting and relevant subject, then we could wonder whether that relevance could also find a reflection, a correspondence in the economic evaluation. So digging into existing literature in art history within the subject of female nudity, we saw three main reasons. We were able to highlight three main reasons as for why the female nude has such a high art historical value. The first reason is related to its very constant and perpetual use throughout art history. From ancient Greek art to Roman art to Etruscan art, this subject is constantly present and continues to be present throughout the Renaissance and now modern and contemporary art. The second reason, as for which we argue for a very important art historical value associated to the female nude, is related to its symbolic and aesthetic characteristics. In fact, right from ancient Greek art, the nude, the female nude in particular, became a symbol of the canons of beauty, a symbol of perfection and proportions and perfect proportions, not only within the artistic discipline, but also in society in general. Finally, the third reason that makes us argue for the strongly appraised art historical value of female nudity relates to the use of this subject as a sign and measurement of artistic mastery. Especially from the Renaissance onwards, this concept, this subject has been employed in order to measure and identify the artistic skills and talent of artists. If it was quite straightforward to understand the art historical value of female nudity from an art historical perspective, it wasn't as immediate to conceptualize this term and to define this term in a way that was exhausting and comprehensive. As a matter of fact, not only there are very different interpretations of female nudity within different art movements throughout art history, but also within the same art movement, it's very difficult to identify one definition that fits all artists. And on a different level, from an art historical perspective, it's a very interesting and ongoing debate, the one between the concept of nudity, especially in relation to the terms of nudity versus nakedness, which unfortunately we don't have the time to look into in the presentation, but it's a duality, it's an element that keeps coming forward in the different art movements that developed throughout history. Given these multiple definitions that we found of nudity, we deemed even more important to come up with one that could fit our research purpose, not only from an art historical perspective, but also from a practical perspective, in that our operational definition was going to help us collect the data and was going to help us distinguish between nude figures and not nude figures in our sample. Therefore, we define nudity as that moment suspended between complete nakedness and partial yet skin-revealing clothing. In particular, in Modigliani's case, in Modigliani's repertoire, those portraits outlining female subjects that more or less explicitly disclose their nude figures were identified by us as female nudes. A more concrete explanation could be seen in some examples of the artworks that we collected in our sample. We have two of the most famous artworks by Amedeo Modigliani, the two nude couchés here. In here we see a very typical Modigliani style of explicit, straightforward, unapologetic nudity. But we also have cases of more borderline cases in which nudity is simply outlined, as we can see from the caryatid depictions here. The second clarification that we need to make in regards to our research question concerns the choice of a case study. This can be understood from the previous argument in relation to the different conceptualizations of female nudity. But we noticed that given these different definitions that artists relied upon in their creations, it wouldn't have given our study justice to have a pool of artists and hence a pool of definitions of nudity placed together into one variable. For this reason, we decided to, looking into art historical literature, we decided to look into one artist. The second, more practical reason is that there are already existing studies in which the nudity variable is not the central variable, but in which it has been taken into account with, of course, the analysis of multiple artists and multiple movements. And we noticed that in all of these existing studies, the nudity factor, the nudity variable, was never able to reach statistically significant result. So we thought it was worth choosing an artist. And all arrows, in our case, pointed towards Amedeo Modigliani. First, Modigliani received a very important education in regards to the conceptualization of the female nude, in that he attended not only one, but two schools of the nude, one in Venice and one in Florence, before his most prolific period. And secondly, and most importantly, his reputation developed hand in hand with his nudes. He became renowned thanks to the unapologetic style that he used to depict these women. And for a more practical reason, we decided to go for Amedeo Modigliani, in that it was quite straightforward for us, even with the borderline cases, to distinguish between nude figures and non-nude figures, which was extremely important in our data collection and analysis. With all these theoretical insights, we were able to reach our hypothesis, in which we argue that female nudity in Modigliani's portraits positively and statistically significantly affects their hammer price and average estimated price, respectively. In order to test these hypotheses, we relied upon the use of hedonic regression, which is quite common, as you might have understood from today's presentations, and reliable method in cultural economics, which proved particularly useful in our case, in that it is able to empirically measure the economic values of the single characteristics of artworks. To put this in more simple words, the final price achieved by a work of art, in our case, the hammer price achieved by Modigliani's artworks or their average estimated price, is measured as the summary of the single prices of the material as well as non-material characteristics of the artwork. Because hedonic regression has been used quite thoroughly in cultural economics, there are some of these characteristics that have been recognized as generally valid in the determination of the final price of an artwork. As you can see on the slide, using, for instance, a specific style or a specific technique can affect the final price artworks achieve at auction. For instance, artworks that were made with pencil on paper or pen on paper tend to reach lower prices in the secondary market, whereas oils on canvas tend to reach higher prices. Similarly, the authenticity elements of artworks such as signature tend to help boost the final price these artworks achieve. For less tangible characteristics, it has been verified through hedonic regression that generally artworks sold in certain locations, for instance, the art market capitals such as London or New York, tend to achieve higher prices. And similarly, more established auction houses such as Sotheby's and Christie's are able to generally increase the price of an artwork. These are all characteristics that we needed to collect for our analysis. And specifically, the data collection took place between February and April 2019, relying on websites about collecting information on the secondary market, such as ArtPrice. Here we can see an example of the data collected. We collected the title of the artwork, the year of creation, its size, its technique and medium, the year of sale, the place of sale, inclusive of auction house and location, these authenticity variables, and of course, hammer price and estimated prices. Last but not least, we needed to understand whether our portrait was a female nude or not. Therefore, we needed to be able to dispose of a photo of the lot sold, from which we were able to distinguish whether the subject of the painting was female or not, and most importantly, whether it was a nude female or not. These data was then transformed into variable coded and placed into our model, which is the commonly used model for hedonic regression. As a matter of fact, we included the standard hedonic control variables, which are the variables I just explained in relation to the tangible and not tangible characteristics. But we also decided to make some additional variables that were custom to the type of data that we disposed of in our data set. These variables included the names of the subjects being portrayed, in that we noticed that there were quite some subjects in Modigliani's portraits that were notorious figures at Modigliani's time, and even more notorious at our time. For instance, there were quite some portraits of Pablo Picasso, Beatrice Hastings, and Leopold Zborowski. So we thought maybe more notorious figures will reach higher prices in the market. And last but not least, of course, we had our female nudity variable, which was able to indicate to us whether and to what extent female nudity does affect the hammer and the estimated price. Before we ran the analysis, we deemed important to look into some characteristics of our sample. So we understood from these descriptive statistics that the majority of the artworks we collected consisted in pencils on paper, and that most of them were signed. We also were able to understand that about 2/3 of the paintings we collected consisted in female portraits, although 1/3 of them consisted in female nudes. We also were able to gather and look into the less physical characteristics of our sample. And this helped us interpret the final regression output that we reached. This is for the entire sample, which was composed of 924 lots. However, not all of these lots were disposed of the hammer price, in that some of these lots went unsold. And some of them didn't also have the average estimated price. Reason for which the final data sets that we worked with were of 685 units for the hammer price data set and 855 units for the estimated price data sets. With these two data sets, we were extremely satisfied to see that our models are able to do have quite some predictive power in the dependent variable. As a matter of fact, for the hammer price model, we saw that the independent variables are expected to affect about 84% of variance of the hammer price, whereas for the estimated price model, we saw that our independent variables are able to predict roughly 85% of the variance in the average estimated price. Even more importantly, we were able to verify that the characteristic of female nudity in Modigliani's portraits is expected to increase both their hammer as well as their average estimated price by 0.58% and 0.46% respectively, which means that both of our hypotheses were confirmed by our empirical research. I tried to put this in a more visual, practical perspective, which I think can also be interesting and important with these analyses. What we were able to prove with this research is that if the very famous and renowned reclining nude sold for roughly $160 million, was a portrait of a dressed woman, which I labeled the reclining dressed. It would probably not reach the same hammer price nor the same average estimated price, according to our coefficients. In conclusion, what we were able to say with our research is that the female nudity element, at least in the case of Amedeo Modigliani, is positively valued not only by art historians, but also by collectors and art experts working for auction houses. That nudity is a potential factor in the estimation of the value of artworks, at least, again, in the case of Modigliani. And we were quite satisfied to be able to create and build a very thin yet strong, I would say, bridge between the two great disciplines and the two valuation, art historical on one hand and economic on the other. And then finally, from a more empirical perspective, it was interesting to see how by focusing on one specific variable and on one specific interpretation of that variable, the outcome of the research may vary from already existing ones. Of course, with our research being a case study, there are several limitations to it. I keep specifying that, at least for the case of Modigliani, those are the conclusions that I can draw, because unfortunately, with a case study, we have very limited generalizability and also a very limited sample size, which in comparison to other studies, quantitative studies of the secondary market, is quite an important limitation. However, we also think our research opened quite some doors for future developments of these studies. For instance, it would be interesting and potentially relevant to see how the conceptualization of female nudity is appreciated on the market by comparing Modigliani with other artists in other time periods, and also by looking into other physical elements that determine the appearance of the subject of paintings. And last but not least, it would be very interesting to compare whether female nudity and male nudity can equally influence the economic valuation of works of art. All questions that we aim at looking into in the future. But for now, I want to thank you for listening, and I will look forward to your questions, comments later.
So thank you, Alessia and Philip, for this investigation in the deconstruction, the weighing in of the variables that make a complex price. This was very interesting, and thank you also for keeping perfectly to the time. So we're immediately going to switch to Abigail Moss from University of Southern California, right now in Paris, if I'm not mistaken, because you're doing research here in Paris during COVID year. With you, we're actually going to go back in time, and we're going to see that most of the things described in those 2 days talk are not actually recent phenomenon. We're going to go back to the 19th century, where Abigail investigates valued risks, ensuring exhibitions in 19th century Europe. Thank you. The floor is yours.
Thank you, Benedict, for chairing our session, and I want to thank all of the organizers and participants for this really rich program. So I'll pull up my window now. So just to note that this research is drawn from a couple of chapters of my dissertation, which is about art and insurance. So I will begin with a disaster. On August 14th, 1910, a fire erupted at the Brussels International Exposition 4 months into its run. The flames began at the exposition's communications offices, and they destroyed part of the Belgian section, the British Applied Arts section, and part of the French section. The Illustrated London News catalogued the British pavilion's losses, which included basalt Wedgwood vases, a wood-paneled room featuring carvings by Grinling Gibbons, and one of 2 copies of The Passing of Venus, a 20 by 9 foot long Morris & Co. tapestry designed by Edward Burne-Jones. Oops, I'm sorry, I've lost my page for a second. The Victoria and Albert Museum also lost numerous electrotypes of the blaze, but these were copies of original objects safely stored elsewhere, electrotypes acting as a form of material insurance, as it were. The overall losses were listed at around £1,750,000, what would be about £200 million in 2020, with Lloyd's of London underwriters estimating their own losses at £250,000, or about £30 million in 2020's numbers. This spectacular event dramatically highlighted the risks that threatened art objects traveling the 19th century's busy international exhibition circuit. Vast organizational and financial juggernauts were erected to administer and build these ephemeral spectacles, which numbered over 200 worldwide between 1851 and 1914. They generated government acts, committees, trustees, juries, subscriptions, not to mention the hard labor of construction and logistics. But what corresponding financial arrangements were made to pool and mitigate the risks that came with these exhibitions, which were often attended by millions of visitors and which were staged during periods marked by rapid technological change, socio-political unrest, and unforeseen acts of nature? In this presentation, I provide some brief methodological comments about researching the history of art insurance, a practically unexplored subject germane to museum and exhibition studies, art market studies, and what is more broadly termed circulation studies. I then introduce two private institutions in Britain whose combinatory oversight significantly impacted art insurance at international exhibitions in the decades between London's Great Exhibition of 1851 and the First World War. These institutions were the Fire Offices Committee and the Fine Art and General Insurance Company Limited. Applying insurential, if not always actuarial, principles, they could enable or hinder the circulation of and exhibition of artworks, and I contend that they reveal how, before the 20th century, insurance already constituted one of the art world's most important, yet most invisible institutional gatekeepers. So part one is called Incidental Expense, Art Insurance. As a tertiary economic activity, insurance is a financial service to be distinguished from personal services like domestic work or public utilities, but it may be defined in different ways. Karl Marx describes services as the faux frais de production, the incidental expenses of production and capital paid for out of revenues. Insurance, in his view, is not a physical commodity. Rather, it is, quote, merely an expression for the particular use value of labor, where the latter is useful not as an article, but as an activity, unquote. Economists describe insurance as a sold good in which payment is prospective, anticipating something which might happen at a future date, rather than retrospective, that is, payment for something given immediately in return. Framing insurance as a Foucauldian political technology for control, historian Francois Evalde has noted its heterogeneous nature. In his work, fire, marine, life, and accident insurance share few commonalities aside from their combinatory structures and the historically contextual ways that their agents opportunistically create risks, which they then work to monetize. So if insurance is a set of expressive activities unfolding under continually shifting temporal parameters, how might it be possible to trace change over time in art insurance, and is that even the point? As art historians of the early modern period will argue, the insurance of art objects is hardly a modern phenomenon, but one which arose from marine and fire markets. In the 19th century, it would fall into a collective category called general insurance, and art dealers and private collectors' records yield, as you've all seen, no doubt, discrete data on insured works in annotated inventories, catalogs, and probate documents. And numbers of these may also be found in insurance archives. Meanwhile, records for individual art objects are rare in the voluminous but incomplete extant policy registers for the long-lived British fire insurance companies, such as the Hand in Hand, the Sun, and the Phoenix. So shortly, it can be challenging to assemble statistically significant data about art insurance in the same way that one can with the more regularized life insurance, the latter being dependent upon actuarial principles generated from census and mortality tables. Another approach to researching art insurance is to look at institutional development, which is my goal today. In this regard, the archives of international expositions provide a rich vein, as many of these included fine and applied art pavilions stocked with works produced or loaned for the occasion. These displays almost always suffered logistical dilemmas pertaining to insurance, in the process generating reams of committee minutes and correspondence. Additionally, gaps in official exhibition planning often open doors for opportunistic investors to float new associations. And to illustrate this, we can choose from many examples. So in 1857, at least 16 conventional insurance companies underwrote some of the 16,000 works of art displayed in the Manchester Art Treasures exhibition, with transactions recorded in registers like the one on the right. And yet, as Elizabeth Pergam and recently Barbara Juves have shown, lenders complaining about inconsistencies in coverage threatened to pull their pictures from the roster, and a series of similar issues also arose at the 1862 Art Loan exhibition at South Kensington Museum. In 1867, when it was clear that Napoleon III's government would provide no fire coverage for works on display at the Paris Exposition Universelle, 50 private insurers created an assurance association based upon mutual life insurance. A further point in the British context can be made about how economic and legislative change affected the development of specialized insurance schemes. As Britain's industrial predominance waned in the later 19th century and its colonial investments intensified, London became more important as a finance hub for invisible sectors like banking and insurance. In order to promote laissez-faire capitalism, the British Parliament passed mid-century acts that legalized limited liability companies and loosened incorporation restrictions in place since the South Sea bubbles of the 1720s. These included the Joint Stock Companies Act of 1856 and the Companies Act of 1862 for insurance. So by the mid-1860s, numerous insurance companies incorporated. In his unfinished compendium, The Insurance Cyclopedia, insurance writer Cornelius Walford noted that in 1872, an association called the Artistic Insurance Trust had been proposed to indemnify artists from accidents that might occur to their works while loaned for exhibition, but this project remained only a projection. In 1882, a British art insurance company formed with a small board that included several royal academicians, but this company dissolved, failing perhaps because it was too small, its network too weak, and its directors too inexpert to navigate a competitive market. Still, its advent underscored a perceived need for specialized art insurers, especially when the conventional insurance establishment was making business difficult. So part 2 is called the Fire Offices Committee, the problem with valued policies. One establishment edifice was the British Fire Offices Committee, or the FOC, a cartel that formed in 1868 to lobby the government, police the profession, share knowledge about new risks, and regulate premiums or tariffs on hazardous commercial risks like wharves, cotton mills, and warehouses for perishable commodities. It was started by the largest competing fire offices, the Sun, the Royal Exchange, and the Phoenix, and at the outset included over 50 insurance offices in Britain and some overseas, while continuing to expand its reach throughout the century. It also assessed numerous exhibition risks. Aggregating records between 2 large archives, the Phoenix Insurance Collection at Cambridge University Library and the London Metropolitan Archives, I found internal memos regulating premiums for at least 30 exhibitions, as well as those pertaining to art insurance, including transit risks and all risks policies for municipal art galleries. And the all risk policy is like a 19th century antecedent to what we might now call nail to nail or wall to wall insurance. And it still exists. These memos would have been delivered to all of the participating FOC member companies who were expected to abide by the head committee and subcommittee's proclamations. The FOC's procedure for investigating proposed exhibition risks is illuminated in this hand-drawn map of the 1907 Irish International Exhibition in Dublin. As in the more common civic fire maps, like those by the Charles Goad Company, structures and attractions are marked with the recommended tariff rates, while notes assess distances between buildings, the composition of building materials, the number and location of fire hydrants and water mains, the availability of handheld firefighting equipment, and the number of constables and firemen at hand. And in this detail, you can see the Fine Arts Palace on the left with little red marks where the water mains and fire hydrants were. The FOC's assessors seem to have rarely possessed professionalized art expertise, but this did not stop its agents from making revealing aesthetic judgments. Assessing, for example, the risks posed by the 1908 Franco-British exhibition, a manifestation in comparative nationalism held at Shepherd's Bush in London, the FOC representatives sketched the British and French display strategies at the Applied Arts Pavilion, noting, quote, "The French system is so place their showcases that the gangways form a sort of maze, along which you twist and turn about and always seem to be running headlong into the glass fronts. Of course, the object of this is to make you look into the cases, and it is no doubt satisfactorily achieved. But the arrangement does not improve the fire risk because the eye cannot sweep over big spaces as it can where the usual English system of long, straight corridors prevails." And in the margin, he writes, "Also very difficult to throw jets of water effectively from hydrants." Evincing perhaps a subtle Scopic chauvinism, the assessor's observations, pragmatically recommending the British/South Kensington model of display corridors, which not incidentally were criticized in art circles for their fatiguing monotony, underscored how insurance was an expressive activity that placed alternative values on aesthetic forms. But while its approach to building insurance was relatively standardizable, the FOC had a harder time fixing tariffs on the building's contents, especially when they were art exhibits. Its tariffs were seen as too high, and it mostly refused to write what were called valued policies. And these are policies where company and policyholder agree on a set value for a payout should a claim arise, preventing the insurance company from assessing any potential losses themselves. In an 1888 address to the Faculty of Actuaries in Scotland, one of two such professional bodies in Britain, John McCandlish, the faculty's first president, explained the dilemma in the context of fine art. "If we agree to pay one man £1,000 if a certain picture were burnt because we knew its value and were sure the owner would take the utmost care of it, how could we refuse to insure another man in similar terms, though we might suspect both his valuation and his carefulness? Values change too, and what was worth £1,000 yesterday may come by the turn of the market to be worth only £700, so that if the owner were entitled to get a £1,000 for it in the case of its being burned, such an accident would it be a thing not to be regretted or very carefully guarded against." For insurers accustomed to valuing standardizable risks like warehouses or machinery, idiosyncratic picture values posed a problem. Valued policies were also undesirable because they locked the insurer into an inflexible contract with a client who may or may not pose a moral hazard. That is, the client may or may not convey the object's correct value to the underwriter when applying for a contract, what today would be considered a situation in which knowledge is asymmetric. So, when the commissioners of the 1888 Glasgow International Exhibition of Science, Art, and Industry requested valued policies to be written upon its picture exhibits, the FOC's internal subcommittee on the subject debated and then refused, arguing that it would be highly inexpedient to do so. So part 3 is a peculiar business, the Fine Art and General Insurance Company Limited. If the FOC's heavy hand seemed to restrain the exhibitions market, a non-tariff company eventually formed to challenge its dominance, and this was the Fine Art and General Insurance Company Limited. Dealer Thomas Agnew came up with the idea for the company after art collectors participating in the Manchester Art Gallery's 1889 autumn exhibition found that conventional tariff offices quoted seemingly arbitrary rates. The Fine Art stepped in to offer a niche service, writing short-term insurance on and valued policies at lower rates than the tariff offices for these peculiar and non-hazardous risks like artworks and exhibitions. And as I've discussed elsewhere, it also worked extensively with other dealers and private collectors, formalizing thereby the pooling of art risks that art dealers had long performed themselves, as Barbara Pizzini has shown in her research on Agnew's and Devine's occasional insurance partnerships. The company's reach was international. In the first 5 years, it opened branches in European metropoles, plus one in North Africa, and its directorship tactically melded the professional fields of fine arts with finance, with its board including arts professionals and powerful insurance underwriters, most notably Cuthbert Heath, a storied Lloyd's of London underwriter. Heath's import to the late 19th century Lloyd's was equal to that of John Julius Angerstein's at the century's start, And his work as an underwriter well animates Francois Evald's observations of insurance as a historically contextual, opportunistic form. Heath induced Lloyd's to move out of the marine market, for example, and he invented insurance for earthquakes, hurricanes, and smallpox, and he was also a vaccine advocate. And so it's thus unsurprising that he would furnish his expert services to London's only specialist art insurance office. As non-tariff providers working jointly to cover new insurance risks, Heath and the fine art insurance company were thorns in the slower moving FOC's flank. Brief notes on its policies. Between 1890 and 1914, the company insured artworks at more than 40 exhibitions, including the 1893 World's Columbian Exposition in Chicago, the 1893 Kimberley Exhibition in South Africa, and the Paris Exhibition of 1900. Usually it took smaller lines of risk and heavily reinsured its coverage, even starting 2 satellite reinsurance companies to do this work. It also cultivated a number of international partnerships with agencies such as Heinfeld and Rapp, a Dutch firm who oversaw the Fine Arts Amsterdam branch and effected insurance on behalf of the fine art for the Liège Cathedral treasure and for valuable objects at the Brussels Exposition of 1897. It also worked with most of Britain's major museums, and I'm currently researching the fine arts relationship with the Victoria and Albert Museum, whose circulation department famously loaned collections to the government schools of art and to temporary exhibitions at provincial and foreign institutions, but would require borrowers to take out all risk policies against theft and fire as a condition of its lending, a sometimes onerous requirement that taxed civic borrowers' budgets. As a limited liability company, the fine art was beholden to its shareholders, and these included arts professionals like prominent Royal Academicians, along with financiers, merchants, and other insurers. And this is where a final telescopic point may be made about the art world's imbrication with informal imperial capitalism, that is, imperialism carried out largely through economic means. For the company relied upon personnel and investments from representatives of Jardine Matheson, a China trading company that in the early 19th century circumvented the British East India Company's monopoly in the Far East, and later played a coercive role as traders in the Opium Wars. And this is important because the fine arts shareholders directly impacted the risks the company would agree to underwrite. So in our own age of multinational companies who tactically invest in and so influence cultural affairs, or in this case, fund financial services to the arts, there's little that may be surprising here, but I would just like now to close on the point that I hope I've illuminated some of 19th century insurance's gaps, opacities, and inconsistencies. Insurance is nothing if not a tool or an expressive activity geared towards futurity. So thank you very much. That's all. I stop sharing.
Thank you so much, Abigail, for this demonstration of the imbrication of art and capitalism and the opacity of all the tools that we're studying in those 2 days. Thank you very much. So we're now switching immediately to Chiara Pilozzi, who is from Università di Roma, Sapienza, and who is going to talk to us about art funds and fractional ownership, 2 sides of the same coin.
Thank you.
The floor is yours, Chiara.
So, good afternoon, everyone, and I'm honored to be here and have the opportunity to join this conference. My contribution, entitled Art Funds and Fractional Ownership, 2 Sides of the Same Coin, addresses the issue of tradition and innovation in art investment models. The purpose of my article is to overcome one-dimensional judgments that involve fractional ownership and investment funds, assuming that they may actually be the answer that market dissidents have provided to the demand for greater transparency and accessibility. 2 sides of the same coin, mainly consisting of the need to expand the number of participants and to overcome the aging of collector population. The analytic question regarding the morality or immorality of considering art as an asset class should be now considered anachronistic today. With the expansion of an aggressive contemporary art market, any attempt to hide economic interest behind dealing with artworks has become pointless. Through a steady growth of sales price, fast spread of information, and entry of young and foreign buyers, the millennial link between art and finance has been consolidated, leading to the creation of a highly favorable environment for investment in fine arts, progressively regarded as an accessible pool of value. Though the stigma of investors equals speculator has not been completely removed yet, there is a common understanding that our market insiders are now called to combine the fulfillment given by the consumption of art's aesthetic qualities to its economic advantages. The present articles aim to explore the correlation, both in theoretical assumption and in technical operation, between art funds and fractional ownership, undoubtedly two of the most widespread and least known form of investment in the sector. For a long time, it was a matter of choosing which story to believe. The one who saw funds as institutional parents and fractional investment a form of youth crypto rebellion, or the one according to which art funds' complexity and inaccessibility have caused their own failure. The second version presents fractional ownership as a wholly new model that guarantees unlimited profitable investment scenarios thanks to the support of revolutionary technologies such as blockchain. As the proverb says, the truth lies somewhere in the middle, and no productive discussion can arise from the dense opposition of two ideas. This kind of fight rarely recurs in other fields. One thinks of real estate, when fractional ownership, timeshare, shared property models, and traditional investment coexist peacefully. Hard market's peculiar dynamics rely on its anomalies, which make it difficult to compare with other industries. Art and collectibles are known to be less accessible to risk associated with financial assets. Compared with Standard & Poor's index, the art market has shown exceptional resilience in facing economic crises, emerging from a downturn with a more robust rebound. Art, was it more, has a positive correlation with the price of gold, thus reinforcing the idea that artworks could be considered a safe haven asset. Confidence in art investment has been shown by Knight Frank's data, according to which during pandemic period, 23% of respondents declare that their clientele has increased their spending on passion investments with art in the first place. Even Deloitte Luxembourg shows an encouraging interest for portfolio diversification and investment returns. However, to face the liquid, opaque, regulated nature of art as an asset carrying high transaction costs, at the mercy of unpredictable public taste and fashion, and subject to elevated risks, joint ventures have been operating since 1900, ensuring a shared return within the investment group. These models are the ancestors of modern investment funds, hybrid solution between private return-oriented investments and institutional collecting, born to widen the pool of investors, democratizing the access to the market. However, after being welcomed with lukewarm enthusiasm by the art market, they've shown themselves open to accredited investors only, keeping information not publicly accessible. Here's one of the latest projections dating back to 2017 that show a progressive market downturn. However, since investment funds are full-fledged private transactions, it is not unreasonable to think that the market size, estimated to be worth around 834 million in 2017, could have been grown since then, according to the most recent increase in private transactions. Still, the lack of available reports on the state of health of the global art funds market triggers the capital to flow slowly. Fractional ownership has made its entrance, promoting the same ideals as art investment funds, promising the creation of a new, transparent, and democratic environment for a younger generation with a low threshold capital. With little money, everyone can have a piece of culture, claims the advertising slogan of Otis. Riding the wave of disillusionment toward traditional assets, fractional ownership reached out to millennials, attracted by the opportunity to have their first hand-on collecting experience and passive income opportunities. Therefore, if the market purists have proved critical with the funds, they came stronger with fractional ownership. Since the beginning, big collectors had confirmed the doubts already turns against the art funds, that is, the threat of loss of contact with the oeuvre, now reduced to stock shares, and the altered perception of the property right of the artworks, no longer coinciding with the exercise of possession and enjoyment. Traditionally opposed to pure amateurs, investors were usually reluctant to consider blockchain-based fractional acquisition as profitable addition to their portfolio. Main concerns had focused on the lack of a legal framework regarding tokenization and the prospective over-speculation in the art stock trading. Art dealers had argued that the creation of marketable share could call into question the nature of art as a non-correlated asset. During my university career, and especially while focusing on the application of new technology to the art market, I noticed that at really first, nobody in the art industry wanted to link their name to the blockchain, like it was something dangerous or just a weird tool to stay away from. Not to mention fractional ownership. And it's now incredible to see the greatest results in actions and the NFTs fever that is involving the world market. A lot has been talked and written in recent months about NFTs in media outlets around the world with technology, finance, art, and everything in between. But it's important to underline that fractional ownership also calls into question the traditional consumption of art in a similar way as art funds have swept away the hanging painting above the fireplace. In response to criticism of the materialization of artworks, a company such as Masterworks has developed a hybrid solution. After purchasing the artworks and closing the public bid campaign, it permanently exhibits the pieces in the gallery. Thus, the work occupies a physical place and coexists in a digital platform used by the company to provide customers with access to information and high-definition photographs. The initiative was to demonstrate that the public dimension of fractional investment could outshine the funds, whose artworks often remain safe from prying eyes in some free port around the world. Fractional ownership was presented as a valid alternative to stem the excessive power of the intermediary figures, exploiting the potentialities of smart contracts, deterministically executed codes capable of matching a specific automatic result to an input, reducing the bureaucratic load, providing with faster and cheaper transactions, opening to a broader audience of investors. Reliability is guaranteed by the immutability and distributed consensus in the blockchain. In this connection, it is worth remembering that the trust provided by the traditional art market institutions has never been a free service. Customers are required to pay the service fee for accessing to information on the works, evaluation, and logistical support. In investment funds, the lender group avails of the advice of an intermediary to manage and allocate capital, devoting over 1/5 of the total investment. On the contrary, the companies of fractional ownership refuse the intermediation of consultant and manager of investments, putting the portfolio administration in users' hands. Save time, save money. However, if it's true that smart contracts allow investors not to involve lawyers or notaries in art dealing, reducing intermediation costs, at the same time, the need of a computer programmer arose. Still, this new form of mediation is not risk-free. It is not unlikely that engineers will be forced to simplify the regulatory language to facilitate its comprehensibility by computer systems. The reason is due to the very nature of the computational code. While its rigidity may limit the margin of subjective interpretation, it would, however, be impossible to translate references to abstract concepts used to define the manner of execution, behaviors, or attributes of contractors. This kind of arbitrary intervention could affect the outcome of the contract. Should this be wrong, or with the facts attributable to the person responsible for transmitting the agreement to the blockchain, it would not be possible for the system to revoke it, thus rendering the law on the cancellation of contracts unenforceable. Similarly, the deployment and adoption of anonymous decentralized communication channels could eliminate the possibility for legitimate forms of surveillance used for prosecution and law enforcement. The mainstream adoption of blockchain technology and fractional ownership investment are propelling governments to make the needed shift in the way we perceive the role of law in art industry. However, I firmly believe that international regulatory alignment is unlikely to happen in the near future, but this phenomenon is involving national security jurisdiction to draw a proper frame for security tokens. By preventing the free trade and the flexibility of token exchange, on the other hand, many advantages of fractional ownership would be undermined. Faced with this blurry scene, the present article aims to provide tools for interpreting the present of investment models while wondering about their future, deliberately leaving back convenient answer and establishing a gray area to host a dialectical discussion on this topic. Rather than keeping asking, will our funds succumb to fractional ownership innovation, or will fractional ownership succumb for being too innovative? Let us look at the issue from a different perspective. It is hard to predict the scope and depth of change in behavior patterns and economic ramification, and it is yet unclear how substantial a tool will NFTs become for art industries. Businesses, governments, entrepreneurs, and investors are studying the opportunities and possibilities of this technology and how to use it under the current partial regulation. Next generation will be called upon to take the best from each model and to draw the most effective strategies to integrate investment into our market practices. Thank you.
So thank you so much, Chiara, for your presentation. And I have to say, it was quite spine tingling to have you present this question of, is art a safe haven? Just after the presentation of Abigail telling us how vulnerable those combustible canvases were. So thank you for your three presentation. We're now going to first give the floor to the four panelists. And I'd like you to look into how your talks intersected on affordability, transparency, valuation, and all the complexity. Whatever Masterworks wants you to believe, that you can demystify artworks and make it not boring. I hope we can actually say we are not making it boring by actually complexifying it. The floor is yours.
Thanks. Maybe Chiara, I was interested in hearing about your thoughts about. I know that there was this situation just now with the U.S. government, like reaching into the blockchain to snatch back funds from gosh, I'm totally blanking at the end of the day. The vulnerability of blockchain to governmental interventions, and I wondered if you could like dilate a little bit more about that, because I think that's really interesting.
Blockchain and laws probably are not on the same track, and this is obvious. And taxes, regulation. I talked about contracts. Blockchain has now this has involved not only our market, but we can say multiple industries, real estate, supply chain, and everything. But on the same hand, and that's why I was writing this article. When we are talking about art funds and fractional ownership, we are talking about the same weaknesses and the same strengths. Blockchain is just a tool. So art funds and fractional ownership are nothing different. Blockchain is not transparent. Art is a safe haven asset if you are a good and wealthy investor, but blockchain cannot stem the weakness of investing in art. And I was interested instead, while listening from you about insurance, the enormous possibility that blockchain is actually disclosing for insurance. And even the most traditional actors in the market are now considering using blockchain as a provenance record. And of course, for contemporary art, for contemporary artists, because going back to 90s, 80s, 18th century would be a massive work. But in case of insurance, in case of fire or in case of calamity, natural calamity, having such a tool could be great, even for scholars and for recovering news and notice from artwork.
Hmm. Yeah, I wish. I regret. I mean, I feel like my project is an invitation to all the people who do contemporary studies to like fill in the gap after 1914, because there is like so much more to the archives that I would have liked to have added, but I needed to like, you know, create a coherent cut, and the war really sort of throws havoc. It throws the insurance world into havoc. But yeah, I would love to see other people doing this work. And also, I guess it's maybe an invitation to people who work internationally, Dutch art market scholars who would like to work on that Dutch company that I, you know, because of language restrictions, I wasn't able to really work on. But it's potentially very voluminous, and I didn't really get to mention the differences in national insuring worlds, which also affected how things worked. So,
in that case, maybe if I may, I have a sort of a follow-up question for Abigail, or at least, or maybe a comment. And first of all, thank you for your presentation. You know, you mentioned the Dutch art world or Dutch art market, and when I'm thinking of art insurance, when I see the first evidence of it, so to speak, I'm thinking of maritime insurance. You know, in early modern times, where you know, when the Low Countries were net exporters of works of art, these works, when they were put on ships, were part of insurance packages, basically. And I was wondering if the expertise, and the same was, I'm sure, it was very much true for England then, starting in the 18th century. And I was wondering, do you have a sense that the expertise that was developed within the insurance world to assess works of art and value them, is that what they used when they started, you know, insuring exhibitions? Or I'm just wondering of the historical roots that precedes the 19th century.
Yeah, I think that from what I've seen, you know, it comes out of exactly these old forms of insurance. So, and I say forms in the plural, it comes out of fire and maritime insurance precisely, and maritime insurance, you know, back to Genoa, in terms of contract insurance, because there's forms of insurance, people would argue, back into antiquity. But what we have, when we have like this kind of this condition of a form being underwritten, of a risk being underwritten by interested parties, that's really more of like an early modern development. So yeah, I mean, I think that my company, they're relying on maritime language in their policies, and I didn't show any of their policies. That's like a very obvious missing element today, but I have in the past. But they use this language, which is like recycled. There's a fantastic book which scholars of Atlantic slavery often refer to, John Westcott's big compendium on insurance practices, and that has it's from like 1781 and 1783, and that has descriptions of how to frame policies using this kind of using this language, this very like quite flat-footed and pedantic language. It's a very like stark language, the language of insurance.
Okay, well, thank you. If I still may, maybe ask a question to Chiara. You know, a very nice presentation, very also optimistic about, you know, the use of these new technologies, and that, you know, I'm reminded of my students in the master cultural economics in the art market course. They say like, well, this is the new best thing. You know, while I'm not an expert in this field basically, but I do know, basically I just read the art newspaper, right? And even in 5-6 years ago, blockchain was hailed as completely revolutionary. This is going to completely change the art market. And of course, now we have the NFT craze, and, you know, the fractional ownership with the tokenization has been going on for some time. But to what extent I mean, yesterday I happened to read that the market for NFTs collapsed by 90% just recently. And also the tokenization, the fractionalization of art, there has not been a complete success story. There's been many startups that were, that invested in this that had to fold. It doesn't, like I said, I'm just an observer and just reading the art newspaper. It doesn't seem to be taking off in the way that maybe some millennials want to present it. And I was wondering if you have any thoughts on that, and do you really think it's going to be revolutionary at the end of the day?
No, I don't think so. I didn't mean to be optimistic in a way. It's not taking off, and like art funds, the art funds had not steady roots in the art market, and we know that. And even because, as I told before, high threshold capitals and lack of information, lack of transparency are triggering the capital to flow slowly. And it's the same weakness that we are experiencing now with fractional ownership. Fractional ownership is not transparent, and NFTs is not collecting. That's why the market collapsed. I spoke about investment, and investment not always, but often, sometimes, is speculation. And the unregulated framework in which blockchain and NFTs and fractional ownership lays now is the perfect environment for speculation and for excessive volatility of the market. And we know that because our market has experienced it, as blue chip artists has experienced it in the past time. So I'm optimistic on the tool of blockchain. Blockchain is a tool, and we should know how to use it. And fractional ownership is not new, it's nothing new, it's old. Joint ventures, art funds are the same. Fractional ownership is art funds based on blockchain. So I spoke about NFTs fever because, in my opinion, it's a fever. It's not a phenomenon. It's not still something we should really take in count when we speak about. We should take in count when we are speaking about fashionability of the art. NFTs now is collapsing phase due to the lack of regulation, due to the lack even of acknowledgement. People often think they know how NFTs works and how NFTs market works, but it's not always like this.
Thank you.
We had a question from Antonia.
Thank you very much. I really like all three of the contributions just now. I would like to have a small comment to you, Chiara, what you just said, and afterwards a question to Alessia and her presentation. So if I remember correctly, what you said is that NFTs are not collecting, which I think definitely here you have the very, very strong investment aspect. But with NFTs, I see a point of collecting, because NFTs when NFTs do represent a single artwork, you may be able to show it, and there are ways of actually showing the art that you buy or the video sequence that you bought on your wall, and you may look at it. Whereas this, indeed, I really don't see with fractional ownership. So at this point, I completely agree with you that fractional ownership, represented maybe also via NFTs, is something that for me is really only about investment and speculation, and about buying and selling at the right time, which is why, and now coming to the point of regulation, I think there are debates going on now whether NFTs or NFT art even should be regulated in terms of securities, which I so far would have not supported, except for the very point of fractional ownership, because here, indeed, you don't have this. It is so similar in the material, in the use of it to a share, that I really see that this should indeed, or this bears so many similarities that I see a very strong regulation in terms of financial market again. I would like to hear you comment on that, but let me first ask the question to Alessia. That's a very interesting presentation. Were there any cultural differences that you were able to detect in terms of how do people from different cultural backgrounds react maybe to the topic of female nudity? Is there a relevant difference depending on the region, or haven't you been able to detect this yet in your survey? Thank you.
Thank you for your question, and I will exploit this moment to also thank the other two presenters. Very interesting presentations. So this is a very, very interesting question that I also wondered myself, especially being interested in Asian art. I initially thought, in light of my research question, to also see whether there were some effects in relation to the location of the sale or potentially the cultural characteristics of buyers in relation to these auction sales. However, in part in light of the sample that I was able to collect, in that I can tell on the top of my head, I didn't have too many sales taking place in locations outside, I don't know what happened, outside of Europe or outside of New York. So I wouldn't have been able to address this, at least in a quantitative analysis. But this also would have been, if I tried to include this element into my question, I think it would have overly complicated the analysis. And at the same time, for the reputation that Modigliani has, I'm not really sure that I would have been able to make a distinction between the different visions and cultures. Maybe this is something that would apply better to more contemporary art, or maybe art that has less of an historical establishment.
Thank you.
Thank you. We have a question also from Ginevra, or is it Mauricio?
Yeah, it's Mauricio this time, because I spent a few years working on the blockchain technology, so I was kind of really interested in these last interventions. And my question for Chiara is about fractional ownership. And I was wondering if, according to what you found out, do you think that maybe this could bring also the same effect that we noticed this year, for example, in the stock market? I was keeping in mind, for example, the GameStop effects that we have thanks to platforms like Robinhood that allowed a lot of different small savers to invest into the financial market. And I was wondering if this fractional ownership could bring potentially the same effect of having this kind of potential bubble on one single art piece or one single artist, and what the effect could be then according to this kind of a democratization, let's say, of art collecting.
Yeah, I'd like to thank even Antonia in her comment before. I expressed myself badly before traditional collecting. The NFTs fractional ownership could have a greater potentiality for younger and millennials. But right now, at this stage, I don't think it could be great, even because of bubbles. And that's why I'm answering to Mauricio. I'd like to say yes. For me, fractional ownership at this stage, blockchain at this stage, without enough acknowledgement, without enough law framework, regulated framework, could be a bubble. And I'm thinking about CryptoKitties and CryptoFunks and all these NFTs, bubble, and even all this fragmented universe of fractional ownership companies. We have now trillions of companies that are acting in this market. And this could be dangerous for the market, for the instability of the market. So yes.
Thank you. We'll take one last question from Anne-Sophie, and then we'll have Adriana, whose hand is up.
Thank you very much to the three of you for the interesting presentations. I have a question for Alessia, because of course it's a topic I really like, especially regarding the connection with art history. We consider that art history can be viewed as a sort of cultural constructs that fluctuate over time. We know that with artist reputation, it's up, it's down, it can change over time. It's very much sometimes also a Western cultural construct. And we also know Modigliani is an interesting case because he has done also so many things. So it's not only about nudes, and there are other parameters that are interesting, that are appealing to buyers, the colors maybe, and all these characteristics. On the other hand, there are also other artists, and it's to build upon your limitation and potential research avenue. There are other artists who also build their brand names, really the reputation based on nudity, with some representation and depictions of nudity that in the past was viewed as okay. Now that are maybe more controversial, especially if we think of Polish French artist, modern artist Balthus, if we think of photographer David Hamilton, now it could be controversial, but they base the reputation on that. So do you think that in this case, nudity and the iconography technically could be very much correlated with the notion of reputation, or do you believe that because it's still Balthus, because it's still David Hamilton, nudity iconography will not affect the reputation on the market? So basically that would be interesting to look at the market of these artists right now who also depicted nudity in a certain way. And yeah, I'm just curious to get your thoughts on that.
Thank you for the question, Anne-Sophie. Well, this was a very debated question within my case study, indeed, in that I definitely read a lot in art historical literature in relation to how the has built hand in hand with the shocking nature of his nude, and his name is always often associated to his nude portraiture. However, I have also read quite a few references that refer to Modigliani as a renowned artist for his portraiture in general, and in particular, maybe the portraits for which he's known that are nude portraits are the ones that were exhibited in 1918 in the only exhibition before his death. And those are only 35 portraits, oils on canvas. In my sample, I had the greatest majority of the artworks consisting in pencils on paper. Therefore, I was reluctant to associate so straightforwardly the value of these nudes with the reputation of the artist. And also to find an answer to this doubt that I also had in the I made some extra tests in the analysis. So we made also some quantile regressions to see whether there was a different distribution in terms of how the nudity variable potentially affects price in the different price ranges that Modigliani reaches. In that, indeed, I did have the two shockingly expensive sales with the nude couchés, but I also had several drawings and watercolors of nude figures in the sample. And the results demonstrated that the nudity factor is a relevant factor and a positively relevant factor throughout the entire price ranges that I had in my sample. Again, I think the best way to really understand this would be to compare and juxtapose the case study of Modigliani with other artists, maybe not only artists who are renowned for their nudity iconography, but maybe even more importantly, with artists who are not renowned for their nudes. I think empirically this will be challenging because it would be important to have a wide repertoire of nude paintings without this artist being known for the nudes. So I think it's difficult to tell in general. But indeed, comparisons here can help.
And I think if you work on bigger data sets with more artists concerned or not with nudity, I think using interaction terms, for example, between the artist name and the variable nudity in your model while controlling for the nudity in general and the other artist name could be interesting to see if, depending on the interaction term, you see positive effect or negative effect on the artist's reputation.
Right. For the sample that I had, I was only able to make interaction terms in relation to nudity and other physical, not physical characteristics. But indeed, if I wanted to amplify the research, that would probably be in the right move, I think.
We're going to move on to the questions by Elisabetta and then quickly also Dorothee. And then I think Adriana wants to take some time to conclude and talk about the exciting news of the next workshop. So we've got to do this. Elisabetta, your time.
Thank you, Benedicta. I have rather a comment for Chiara. Thank you for your presentation. I'm not so convinced, fully convinced about the parallel you draw between art funds and fractional ownership, because while it is true that art funds and fractional ownership share the speculative aim of the financial speculative aim of investors rather than art appreciation, there are some differences, substantial differences between art funds and fractional ownership, like the fact that art funds are constituted by a portfolio of artworks to be co-owned, and usually these are physical traditional artworks, while in the case of fractional ownership we are talking about one single artwork, and often it is a digital artwork. Moreover, art funds, the portfolios object of art funds are put together by the fund managers themselves. There is no intervention by the owners. Usually, while with fractional ownership, you have the direct buyer's choice in which specific artwork to put their money. And then, yes, it is true that because of the higher currency of fractional ownership, this is less regulated and more exposed to speculations. Let's not forget, though, that it is also much more correlated with with the general Bitcoin market, and also very much dependent on macro actions. For instance, the current dramatic drop was caused by China declaring that Bitcoin is not a suitable currency, etc. And also, I'm not convinced about your argument about democratization of these instruments, mainly because of skill barriers in order to access these, so transaction costs, basically, to access these instruments, and also information asymmetry on top of existing information asymmetry related to the artworks themselves.
Yeah, I get it. And I didn't want to be a fractional ownership supporter or fandom, something like this. I want just to give a critical side on both sides. I perfectly agree with the instability of fractional ownership, with the drop of Bitcoin. And I agree even with the democratization problem. It's not actually democratizing the market. And for this reason, I put it in parallel with art funds, because art funds are not democratic. They are open only to accredited investors. And even if fractional ownership, promising to be open to everyone, actually is not open to everyone. Because when I was studying fractional ownership and fractional ownership company strategies, and when I was looking for data, actual data were not publicly accessible. So I was looking at art funds based on fractional ownership. So I repeat once again, I firmly believe that the same weaknesses we are experiencing with art funds are the same of fractional ownership.
Thank you. Can we have Dorothy's question quickly? Dorothy, are you here?
Yes, many thanks for these fascinating talks. I have two questions concerning Abigail Moss. One question, it's really very under-researched topic, and it's fantastic that you are doing this. I think it's really fantastic because we know so much insights into the art market by the insurance people. Yeah, it's really fantastic. And we also know by other research in the 20th century concerning the Cold War, that the insurance people, they had a very big position between East Germany, for example, and West Germany or other countries in the West. And so it's really an under-researched topic, and I think there are a lot of other research possibilities. I wanted to question, you've mentioned in your biography a multi-part project, art and the actuarial imagination. Perhaps you can say a little bit about this project. And I have two little questions to the nudity, because it's a big Philip from he knows it, and I think you will know it too. Alexia Crotta, it's a big topic in the art history. Yeah, we have this gender studies and topics about the nudity, the female, the male nudities, and the different kinds of body and positions and so on. So this in front of the picture, I think that's very important also, this position and the body, and if it's black, if it's white, if it's old, if it's young, I think I think you should integrate it. And therefore it would be, to my mind, it's really very interesting to make it in this comparison with others, because Modigliani, all people say this nudity, it's a factor. It's really a factor, it was a factor. And it's very complex. And I think when you do these comparisons, you will find much more the topics which are the most important for these factor, because it's a factor, but it depends very much on what's in front of the pictures. Yeah, so, and it's there in the moment we have a changement, yeah, because of this Africa and the colonialism, and so the debates, we have changements in the art market, and it's very interesting. I have two little other questions. Do you investigate whether the provenance is complete, or do you evaluate gaps? Because very often we have gaps, and that's a problem for the art market in the moment because of this provenance importance in the restitutions. And do you verify whether the signature really comes from the artists or not from the art market? Because all people think that the signature is anything which gives an authenticity. The signatures very often, they came from the art market. And the restorer, they can tell it to you, and or these people who do this chemical analysis. So I think these two factors are very important to think, because you gave a big dominance to the signature. And I think the signature is anything which is one of the most problematic things of the art market. Okay.
Thank you so much for your comment and questions. Well, you definitely brought up some very big issues in the research. Unfortunately, I didn't think I had enough time to share the entire results tables that I obtained with my analysis. But starting from these two elements of provenance and signature, well, starting with provenance, in the data collection, I only looked into the websites that I listed, so ArtPrice, ArtNet, and ArtValue, and their reference to provenance. So I made provenance a dummy variable. I didn't collect details in relation to the accountability of these websites in relation to this element. So I did not look further. Maybe this is an element that I should do, or that I should look into. Also in relation to the second element of signature, which I will get into in a moment. But as for the provenance variable, although I only had, I think, roughly 50 to 60 units in my analysis in which the provenance was established according to ArtPrice, I wasn't able to reach statistically significant results for this variable. So I have both positive coefficients for both the average estimated price model and for the AmorPrice model, but none of them is statistically significant. So I'm not sure how the provenance in my data set influences the final prices. And this is the reason why this is an interesting element that I should look into, is that I also didn't achieve statistically significant results for signature, which came to my very big surprise, in that most studies that I have read employing hedonic regression were able to generate positive and statistically significant results as of how signature influences the final price. In my case, I had positive coefficients, but not statistically significant, which in this case surprised me more, because most of my units in my sample were actually signed. So I thought I had enough data, or I had enough units in my analysis to reach statistically significant conclusions. So, and this was something that we very much needed to interpret. So we thought maybe Modigliani's case, his style is so recognizable that signature doesn't matter as much as for other artists. Or maybe there's another conversation to be had about the fakes market for Modigliani. So it was very difficult for me to interpret these variables in my.
I'm going to jump in to ask you to hold on to your question and to your answer. And the Google Meet is going to be opened after 6, but the live has to stop. We need to release our technicians. So I'm going to leave a bit of time for Adriana to do the concluding remarks. And before we do this, I'd like to already thank Adrien Fichel and Guillaume Fallet, who have been the technicians for those last 2 days and who will put an end to the whole thing. Thank you very much. At 6 p.m. exactly. So Adriana, the floor is yours.
No, well, I am not going to say anything original. I want to open up maybe just a little bit more. But first, I just want to repeat all of our thanks to, again, the Sorbonne Nouvelle and the fabulous technicians who have been so supportive. And while we have everybody in the audience, just to, again, not only thank you for coming, but I think you've seen how amazing the conversations are. We could have all, obviously, each day go on, except we get exhausted by Zoom fatigue. But I do hope this means that you will continue to engage with each other directly and with us, indeed, when we hold the next workshop. Because one of the, I think, most extraordinary things is just that feeling of coming together, the excitement of exchanging these ideas. And so from, I think, our point of view as the organizers, the fact that we were able to achieve this multidisciplinarity, internationalism, and create these dialogues is really, really exciting, because it shows why actually we've kept on going with these workshops. We just don't want to stop talking. There are so many things to discuss. And indeed, I think we're all going to go back and be spending quite a lot of time with reading lists, with ideas, and with follow-up, including eventual publication. So I think as probably 6 is going to come, we should say goodbye to our YouTube audience. Benedict, is there anything we need to say before they leave? Okay, except we hope to see you in reality, possibly for a book launch, and we can all come together, because I know there are lots of people who are listening who have been in other workshops, and we all deserve to have a sort of grand celebration somewhere, perhaps on Mary's liners. I think maybe we should hire the Queen Mary and for 5 days and celebrate together. Maybe that's the next place for our conference, our workshop. I think it depends on what you all want to do. When we were talking about summing up, I did think of some points that one could make. I think almost everything that I will say is probably very well known and recognized to all of you here. But maybe if I just start with some of the things that I think have been incredibly interesting, useful, important, and how those things relate also to our idea, which is that this is, as much as this is about information, and of course information is deeply exciting, it's also about the methodologies and the tools we've been using. So just to repeat that, actually what's been interesting with this is how many sources we have, but also ranging from archival sources to, you know, tax accounts, books, insurance ledgers, all these sort of many different sources which enrich the subject. And I'm only talking about hard copy things, not even the whole digital world. But I think sources are something that again is very important. And the other is this, in the fact that we're coming together. It's not just big data that needs lots of us. It's the way in which you see over the 2 days how we're all learning from each other's ideas and approaches. And for me, that's again something that I've seen in the conversation and I think is absolutely invaluable. I mean, I don't know about you, but I think we all have been saying we're going to go away, think, talk, use this in our own work in a very, very different way. So it just shows you also how these methods and methodologies create tools which we can adapt for our own purposes. So I just wanted to throw out a few ideas very, very quickly. And then, as I say, what I think would be really useful is, you know, see what you all think. But I mean, I think again, what was interesting was that in thinking about financial structures, we really wanted to do what exactly you all have done, which is look at structures. So although we have obviously covered in, you know, exciting topics like investment, blockchain, new technologies, we've also looked at how they actually affect the structures of the art market. And I think we've all kept in focus this that we are looking at, you know, the way the art market works in all its many myriad different ways, and we've explored all of those, I think, in a fantastic way. And that's the way the talks have really intersected. So over the 2 days, we picked up and kept on coming back to certain themes, and I think that again is a reflection of the way in which, you know, our whole approach to the financial structures is, it's integral to the art market, it's part of it, and it's the way in which it opens up avenues to think about whatever we're looking at, collectors, actors, artists, and we've looked at all of those. So very quickly, I thought, obviously we've looked at structures, we've looked at how those financial structures link to international financial structures, right from the beginning with our first talk all the way through to the end, the art market being part of, you know, financial markets, and developing alongside those. Again, we saw today the importance of political events, as well as enormous changes that affect markets out of, you know, societal effects and changes. So we also thought about how the system responding to new audiences, so how crowdfunding is important, how audience is important. There's areas of that we could think more about in terms of the past, but I think we certainly looked at it today and yesterday in terms of contemporary. Democratization, again, is a wonderful term, keeping coming up, but it also addressing social concerns that change, and so how the art market reflects different social changes. On the other hand, we've also seen that major players in the market sometimes can remain the same. So we talked about mega collectors, mega dealers. We've seen wide variety in the types of markets, low-end markets, antiquities, and I can't read what I've written here. Anyway, comics, of course, and prints and things. And we've even looked, thinking of comics, at how criticism and attitudes to the art market, again, might affect finances, as well as reflect financial markets. So ending with knowledge and how important knowledge is, and knowledge is another form of investment that has a financial repercussion, if you like. We maybe are there other kinds of hidden, intangible things that impact on the financial market, and we touched on it. Maybe we could have done more. And we also looked at non-markets, which I think is extraordinary. When we're looking at financial markets, we managed to look at non-market and even pre-market models. So, I mean, I think if I just list those essentially 7 things, we get an idea of just what we have covered. And some of you may want to add other things that we could have covered, but you might also want to think about, as Benedict said, where should we go? What are the things that you really think we should be looking at that we haven't touched on and we could have a workshop on? That was me ending for you all to jump in.
Well, I was thinking, since we've done the structures and the practices, and probably that was issued also, it was like a rebound from the legal framework of the Ljubljana workshop just before this. Maybe now, with all the discussion that has been in the last 2 days, we've seen that it's not just about practices, it's about how those practices or out of the art world community. And so I was thinking maybe the next could be, and that's also prompted by Nizan's little participation, but about gatekeeping in the art community and what actually is this art community, what are the borders of this community?
I'll second that.
May I say something? Or yeah, I'm sorry. I think something that would be interesting as well, and I know because there is also, Adriana probably knows that there is also this debate about how to research the art market, how to deal with data, and a methodological approach, a workshop dedicated on maybe methodology or various methodologies we can use to, yes, investigate the art market and the different issues in the art market, from the empirical quantitative approach, qualitative approach, the pros and cons of each of them, and to have this discussion about the methods would be, I think, quite interesting. And I know there are other people who are also very interested in that kind of topic, so that could be also an approach for one workshop.
Absolutely, yeah.